Hey everyone, welcome to the KE Report, another daily editorial. This time chatting with Joel Elconin, co-host of the PreMarket Prep Show. Check out the link in the show notes to visit Joel's website and listen to the recordings of the PreMarket Prep Show. Joel, this week was all about the Fed meeting and the Fed rate cut, the 25 basis point rate cut, which it seemed like everyone expected, but at quarterly meetings, like this December meeting, we get a dot plot, which is the outline of where the Fed sees future cuts, really just future interest rate policy. And that seems to be what really riled the market after the Fed came out strong just in the last few months with a number of rate cuts, even that 50 basis point rate cut. Now they are projecting just 2 cuts next year, and we all know what happened on Wednesday with a big market drop on the back of that announcement. Joel, what's your takeaway from the Fed? They cut rates, but it is widely being considered a hawkish rate cut.
Good afternoon. Thanks for having me. Always enjoy being on with you. Well, the week's not over yet. We got 2 hours and 20 minutes, so open mouth, insert foot. But I think you summarized it correctly. Even though it wasn't a surprise to a lot of investors, people took it as a hawkish pause. Now, from the perspective of this investor, I thought that the Fed was pretty aggressive in cutting rates and the path that they were pursuing. And I think the market is predicates itself on lower rates. And what I'd rather see the market predicate itself on is better earnings and better fundamentals. So I'm not that surprised that the Fed, I'm a little bit of surprised at the reaction or overreaction, but I think there's other factors that were contributing to the to the volatility and the jitteriness in the market.
Joel, what are some of those other factors then? Because clearly everyone was waiting for more rate cuts, or at least predicting those into next year. What else is at play that I guess caused a more severe rollover after the markets have been fairly flat for a couple weeks heading into this?
Well, you just mentioned a key word there, and over the years being on with me, I like to talk about the quad witch expirations, and that's what we're in the midst of, and that's where you see big turnover in open interest and options contracts and things, either rolling over to the new contract or taking positions off. So that always creates an extra aura of volatility. Over the years, they have marked turning points in the market, either a strong continuation of a trend or a sharp reversal. You had mega sell imbalances on the open this morning into an oversold condition. Also, what's going on in Washington is it's somewhat concerning to investors. They like clarity, they like stability, and right now you don't know if the government's going to be open over the weekend. The hemming and hawing, the debating that's going on with the spending bill, and then if you really want to get to your conspiracy theorists that I don't subscribe to, but bird flu in California, a lot of things in this day and age with the type of markets and the rapid flow of information, things can change in a hurry whether or not they're true. So I think you have the combination of the quad witch expiration, the uncertainty in Washington, and the comments from the Fed. You put those three together, and the markets reacted in kind. You had a long period of consolidation up near the highs, kind of lulled people into complacency, and now they're not complacent anymore.
Joel, what explains the rebound today, though? Everything you just outlined there, especially with the potential government shutdown, the stories out of California, that all screams negative action for me. However, market's taking back about half of what they lost on Wednesday.
Oh, you just need, one thing from Austin Goolsbee, saying that, hey, we're not that far from 2%. PC's in line, really kind of contradicting everything that you heard from Powell on Wednesday. Goolsbee says the path will be determined by employment and prices, and wide consensus at the Fed that the long room neutral rate is well below where the policy is now. Last 6 months of PC information is very close to 2%. So, really, I don't know if those guys are talking to each other or not, but definitely conflicting reports are conflicting views from the Fed.
Sure seems like it. So then what drives markets from here? Because look, it wasn't like the markets were screaming higher before this meeting. However, yes, they did reach an all-time high in about the first week of December. Now we're down. Santa Claus rally really in question for the last couple of shortened trading weeks. Does that change any outlooks for 2025?
Boy, I tell you, I think it's going to be an interesting last couple weeks to the year. You do have seasonality factors. I mean, if you're looking for a Santa Claus rally, I mean, what a discount that you had from last week. So, a lot easier to rally from the levels that we've had from this morning. I mean, we had nearly a 200-point rally off the S&P. So, if you were inclined to, gear up for the Santa Claus rally, you got a nice discount to the prices from last week. I think another thing that's notable in the markets is the king of cash, the king of investing, put some money to work today, Warren Buffett. I don't know what he's doing in Occidental Petroleum. Don't ask me, but he upped his stake in that. He also bought the dip in Sirius XM Holdings. So I think maybe that's a little bit of a encouragement that Mr. Buffett is putting some money to work. A little confidence to the market. So a couple of those factors. I'll be focusing on the close today. This is really mind-boggling price action that we've had, considering the levels that we hit overnight. And the for the week, I mean, we're still going to end up, a nice haircut on the week. But I think that, you're far enough away from that pre-market low or even the intraday low that on declines, you're going to find buyers. On the other hand, people that are like, man, I should have got out near 6,200. I knew I should have gotten back. Maybe if we get back to 6,100, I start to peel. So first things first is you want to see the market calm down. Okay. This isn't calm, Corey. Okay. This is volatility. So if you get a couple days of stability, and if you look at it really, after you made that all-time high, the market gave you at least 3, 6, 9, maybe 10 days of this blah consolidation and tightening ranges. So that's what you want to see. You want to see stability, a stable low, volatility come down, and then perhaps you get a rally. But the price action today is hardly any kind of stability in the market.
Oh, that's for sure. Well, didn't we just see the VIX also on Wednesday have, I think, one of the biggest moves in history? But Joel, this all brings up the question. Yes, we're getting this drop right now, but is it a buy the dip opportunity? If Buffett's in here buying some stocks, buying the dip, should we be following that path, or should we be listening to some of this analysis that says insiders are selling at record paces? How do you balance those two differing factors out?
Well, a young buck like you just should buy and continue buying and buying the indexes and the Qs and the SPY and things like that. If you're an old dude like me, maybe you think a little bit differently, where you're at in your investing horizon. I think right now, what you need to focus on is stocks that, do well in a stable to, I mean, I'm going to call it stable because I don't think rates are ratcheting up higher. But I mean, look at Apple. Look at the tech stocks that are very cash heavy. They're not dependent on rates. So that's what got us here. Look to those stocks to, rebound. I mean, Is Apple making a new all-time high today? Holy mackerel. Let me see here. It's up 323. Yeah, within a whisker of an all-time high. Actually, got very close. The all-time high, Apple, is 254.28. Today you got the 253.93.
Yeah, look at that bounce back. So that brings in the question then, if maybe everyone gets a little bit more defensive, we did see breadth widen out in this last run. If rates aren't moving lower, if people aren't as bullish, do we see capital concentrate back into those high flying tech stocks, almost as
Yeah,
that
I
safety
think,
play?
yep, I think so. I think so. I mean, dance with the prettiest girl that got you to the dance. And I think that's what you're seeing today in the market. Apple, Nvidia's had its struggles, but it had a positive catalyst earlier in the week. Amazon's, I mean, if you look at the correction, I mean, Google that made a new all-time high. Quality stocks that have been performing. I guess you just have to stick with those. Something like there was a big selling balance in Walmart today. I mean, go where the strength is.
Do investors go back into interest bearing investments, back into money market funds now that we have the 10-year close to highs for this year?
Probably not a bad idea. I mean, another thing you have to keep into perspective too is we've had a tremendous run, right, in this year, and it's hard to replicate those gains year after year. So why not take advantage of that? Yeah, I think for your a little bit more risk averse investors, that's something that you may see.
Joel, what about the moves that we saw in the dollar and then correlate that to any of the commodities, any of the metals? You know how much we like to talk those, but the dollar had a spike. We saw everything come down. Dollar's giving a bit back today, and now everything's going up.
Yeah, boy, oh boy, oh boy, silver, boy, these things have just gotten killed. I mean, the dollar getting back to levels where it was in late 2022, that puts pressure on the precious metals. So if the fact that, rates aren't going down as much, then that, is the strength of the dollar. So that will continue to be a headwind for gold and silver.
Okay. So, Joel, biggest takeaways into the new year then? Is it more of a head scratcher? Are you getting more defensive? What is your outlook then for into next year?
My outlook into next year is as long as Trump doesn't follow through on a lot of stuff that he's implemented, then I think the market can continue its upward momentum. I think that if you enact those tariffs, if you dismantle, I mean, the Department of Education's a whole different thing. You're going to have persistent inflation. Personally, I think his bark is going to be worse than his bite, and I think that he's getting these things out there. But you can't have tariffs. You can't cut taxes, okay? And you can't increase spending all in the same time. So as long as there's some stability in Washington, we get some coherent policies, then there's no reason to assume that the market can't continue. But I mean, you start pumping tariffs, that's going to hurt. It's going to hurt corporate profits, and that's what the market cares most about is earnings. So that's what I'll be looking for in the month of January.
Okay, before I get you out of here, then, as we enter the end of the year, shortened trading weeks coming up, choppy trading weeks coming up, are there key levels we need to watch for on either the broad averages, on any chart?
Boy, I'm S&P centric, right? So wherever we close today, I think that will be the level. That let's say we're trading 60.24 right now, basis the March contract. I'll just be watching that. I mean, if we continue to hold these gains today, and then can hold establish support in this area tomorrow, then yeah, the party continues. If this was just a one-off, just crazy volatility because of the expiration, and we start to show weakness, then I don't know. We're so far off yesterday or today's low. It's mind-boggling. So we're right in the middle. We're chopped dead in the middle. I mean, hopefully next Friday, things will calm down. And the way I like to do my technical analysis, the way I like to look at the markets is, I like to look at, past history. And the history this morning was telling me, hey, you're in no man's land as far as support. Look out for 5,800. Well, I got a good number ahead of that right now, and that's 58.66. So I'm going to let the market provide me with some levels to some double bottoms, some stability, maybe a double bottom and then a lift off from that level. At least you have an exit point. But keep an eye on that. Keep an eye on Apple, the Mag 7, and your closing prices from today.
All right, Joe. Always great chatting with you. Always entertaining chatting with you, too. Thanks for sharing your thoughts and your outlooks on the markets and what the Fed did, where investors are positioning. It's a wild ride at the end of this year, and next year, early on especially, is going to be, I think, very volatile and very crazy for investors. But hey, in the meantime, Joel, hope you have a happy holidays. I hope you have a happy new year. We'll try to chat over the next couple of weeks, but probably won't happen until the new year. So it's been an absolute pleasure having you on the show this whole year. And everyone, please click that link in the show notes and check out Joel's Pre-Market Prep Show.